Hi everyone. This week I'm going to be showing you how to complete the quiz access questions 11 through 13. I actually started on the first question and then I ran into some problems with the video, and so this one's already completed. But actually, I think it's going to work out well. That way, you don't have to watch me enter in everything. Sit there and wait while I enter in everything. I will be entering the ones on the next two problems, just to kind of show you some important pieces to watch out for. So the first thing you're going to do is the income statement, right? And that's going to be all the following. These problems are all based off the same information. It's this Carmen Camry, her company Help Today, right? And so when you create the income statement, the first thing you want to make sure you're going to do is set up the income statement. So first of all, this piece of information here, and this is an easy one to miss, is they don't actually have. You need to make sure you enter the date that or the period that the statement is for. And remember, an income statement is about a period of time, not a point in time. The only one that's a point in time is the balance sheet. So first, you're going to set up, okay, and then the formula basically that we're going to figure out is basically how much we've earned, what's our net income. So we're going to say, okay, how much did we make and how much did we spend? So that's going to be our revenues, and it's going to be minus our expenses. So if we look up at these transactions, remember that both revenues and expenses, are part of the equity portion of the accounting equation. So accounts like cash or accounts receivable that you might be tempted to put on there as a part of the revenues are not part of the revenues, are considered assets. So only revenues and expenses go on here. So we look at these accounts; these are all assets. Accounts payable is a liability. Common stock, that is an equity, but that's not part of a income statement. So neither is the dividends. So that just leaves one case of consulting revenue, and then the following expenses: the rent expense, the salary, the telephone, the miscellaneous. So we set this up. We enter in the date. We enter in revenues, expenses. This is going to give you the option of net income versus net loss. In this case, it will be a net income because the company did make money rather than lose it. But that is something when you're solving these kind of problems in the McGraw-Hill stuff, you want to make sure you're watching out for. So then we enter in, then we enter in our revenues first, then we enter in our expenses, and when you do that, it'll give you a total here. It blocks that out once you've completed it, and then all you have to do is subtract the expense total from the revenue total, and that will, if you've done it right, will give you the correct net income, and then you have your income statement. The other thing to check, I always, like in this case, right, I used the check question feature, um, and it's you just so you're aware, you get 3 uses of that per question. So when you take the quiz access, you have unlimited attempts, but you can only check your answers 3 times. So the first 3 times you do the quiz access, definitely you take advantage of that feature. It can help you figure out where you went wrong, and it'll point out what part is missing so that you can know what you need to do next time. So the next one is we're going to make the statement of retained earnings. And so first, again, we want to set this up. And again, you want to make sure you're checking everything's here because it will watch to make sure that you are entering the dates. Again, retained earnings is about a period of time, not a specific point in time. So we're going to give it we see up here, it's for the month of December. And then we're going to be entering retained earnings. Oops. Excuse me. And then we're going to be saying less dividends, right? So because the formula for the retained earnings is the retained earnings and, net income, which is the number we just calculated. So we're going to take the number of net income minus the dividends. Basically, how much money did we make and how much of that money went to the shareholders. And everything else is going to stay in the business and be used to grow the business. So we're going to enter in our net income first, then our less dividends, and it's less dividends. We're going to subtract that from the net income, and that is going to give us our retained earnings as of December 31st, because we've got December 1st. So we know that from the creating the income statement that the net income is $10,000, $10,030. And then up here we have listed 600 and or six excuse me 6,140. All right, so and we're noticing here like this is a like this number is giving us a negative number, so it's saying that we spent more than we retained, and we know that since we have, you know, we know that's not the correct, so that's a good indication there's something wrong. In this case, I'm just checked here, and it looks like I missed a zero right here, right? And now that gives us a positive retained earnings because we know we made, um, we know we know we made it over $10,000, and we were looking at here and we only gave out $6,000 or $6,140 in dividends, which means there should be some left over for the retained earnings. So then we're gonna again use the check work feature, and again we're getting all green checks. So finally, we're going to make the last statement, which is the balance sheet. And again, we want to make sure we set this up. So we're going to check, make sure that the title of, got the name of the company, the name of the statement, and then the date. And this one is different from the other two since the balance sheet reflects the state of the business at a given point in time, so not over a period of time. And then this really reflects the accounting equation, which means assets are going to be on the left, and then liabilities and equities on the right. This is going to be our total assets. And then this is total assets and liabilities. Remember, this is the accounting equation. So assets are equal, liabilities, total liabilities and equities, right? Or is what's reflected on this side of the page. So now we're going to come up here and identify which accounts are which. And there's something I want to show you that I found really helpful to illustrate this. It's an acronym that's dealer, right? So if you're trying to remember which kind of accounts are which and whether they're credited or debited, you can use this acronym. So we're looking at accounts. So the cash account, right? The accounts receivable, office supplies, equipment, land. Those are all assets. Accounts payable, that's a liability, and then common stock, dividends, and all revenue and consulting, that's all equity. Now, the equity is where you might trip up a bit, so we'll come to that in just a second. So first, we're going to enter in. We got cash, and then we've got accounts payable. And office supplies. And then office equipment. There you go. All right, and then finally, our last asset is going to be land, so we're going to enter that in. And that's our asset side. Now we're going to take a look at liabilities, and as we noted earlier, there's only one liability, and that's accounts payable. So we're going to enter for accounts payable. Oops, I'm glad I noticed I just entered accounts payable. That should be accounts receivable, excuse me. So accounts payable is going to be I'll enter in that. It's $12,020. And then we're going to start and enter equities. Now, we'll notice that equity basically can be divided up into four pieces here: common stock, dividends, consulting or revenues and expenses. Well, we already calculated on the previous form all of revenues and expenses. So what we need to do is instead enter in common stocks common stocks, and then because dividends we already calculated those with the previous sheets. All we need to do is pull over our where to go retained earnings calculation, right? So from the previous page, right? So we calculated that we had retained earnings. So we can see here that our retained earnings are 300, is $3,890, right? So that's all we have to do is enter that in over here with retained earnings, and that accounts for all of our equities. So we don't have to enter in everything again. So our common stock was 1, and then retained earnings was we calculated was $3,890, and it's going to fill in automatically. So we're going to click on check again. We're going to check our answers. Again, we get all greens. So those are the way that's the step-by-step way to complete these questions here. Is again, you're basically just pulling this information to create the income statement, which will give you the net income, which you can then use to complete the retained earnings statement, to complete your balance sheet.